It's a different approach where we've been talking about tax topics from a theoretical point of view. Here's an opportunity to use a fictional case study and see how we not just bring concepts to life, but how we coordinate and work together as a team to service that client who is exposed to multiple jurisdictions. We're looking at a fictional case study with a family that's moving from the Philippines to Indonesia to Singapore and then to the US. So the question, we're going to look at it from a tax point of view, how the various tax regimes, how we can help them optimize and plan for each step in their family journey. So let's start at the very beginning. So a wealthy Filipino marries a wealthy Indonesian, and the newlyweds move to Indonesia. So the considerations that one needs to take into account when exiting the tax system in the Philippines and preparing to move to another jurisdiction which taxes on worldwide income as well. So the scenario we're exploring here is where there's a liquidation because she needs some capital to start her new life in Indonesia. So what we're saying is the taxpayer needs to be aware of capital gains taxes. Is there any exit tax in the Philippines? Is there a need to notify the tax office that somebody is going to be tax non-resident? Is there there's some sort of process? Otherwise, looking for you if they think that maybe you forgot your return. Is there a process for notifying them that you're leaving the country? So there's no exit tax, but there is a tax clearance certificate, and there's a need to have in hand before one leaves, and there's a need to, of course, notify the relevant authorities upon liquidation of assets. And let's assume that the immigration side is being handled by the immigration lawyers, and they've just retained us as Mose Roland to help advise them on the tax planning part of the move. So there's a need to register with the tax system, acknowledge the fact that unless there's a prenup in place, there's a pooling of assets, there's a pooling of income, and that may have tax consequences. From a pre-migration tax planning, it is noteworthy that unlike Singapore, Hong Kong, or Malaysia, generally speaking, it's worldwide taxes, right? So that's something that she needs to be prepared for, especially if she has left income-producing assets in the Philippines. Yes, she could have liquidated everything and come to Indonesia with a pile of cash, or she may have left income-producing assets. She may have left some real estate. She may have retained shareholdings in some of the companies, including family businesses. So she needs to be aware that once she enters the Indonesian tax system, the assets need to be declared and taxes need to be paid. Of course, Indonesia, as we discussed in other sessions, being a conservative civil law jurisdiction, there is no tax benefit to any trust structure. There is no tax benefit to foundations as they exist in other jurisdictions that are for profit purposes. In Indonesia, a foundation has a specific non-profit community purpose. So there's no real tax planning tool to take advantage of in advance of a move to Indonesia. Well, obviously, when we're advising this family, we want to advise them to do things the proper way, follow the proper procedures. So we want them to register and declare whatever they need to declare. But wasn't there a nomad visa, which may or may not be of interest to them? Wasn't there a tax regime put in place? It's difficult to navigate compared to others in other jurisdictions. But wasn't there a tax regime that allowed you to exclude your foreign income? You declare your domestic income to Indonesia, but you can exclude foreign income, especially foreign passive income. So like from dividends, interest, foreign rental properties and stuff like that. I think, but it is interesting, and it's perhaps from a tax planning point of view, the one opportunity that is available, potentially available, not to everyone, but for the right person entering the Indonesian tax system. Maybe she does intend to work, or maybe she does have the right profession, then this could be an opportunity to legally exclude her foreign or Philippine source income, at least for the first 4 years in Indonesia. So just in quick summary, wealthy Filipina, a lady from the Philippines, is marrying a wealthy Indonesian. So she's moving to Indonesia. They retain Mose Roland to advise them on the tax side of that move. We can, as a team, instruct them on the proper procedure for declaring any liquidation of assets in the Philippines, acquisition of any tax clearance certificates as may be needed to properly exit the system, the proper registration of transfer of assets as the case may be. There is no exit tax in the Philippines as applies to other jurisdictions, which is always super helpful. Once they've left the Philippines now, in terms of preparation for Indonesia, which is another worldwide tax system, there's a need to properly register, the recognition that the planning tools that may be available in other jurisdictions like trust or for-profit foundations wouldn't be applicable to Indonesia. The idea that there's a pooling of assets, so that depending on what she's bringing to the table in terms of income and assets, this may or may not affect her new husband as well, you know, in terms of them combining to file tax returns. As an Indonesian tax resident, you tax your worldwide income, you declare your worldwide assets, which is not something that happens in every jurisdiction. So that obviously doesn't apply in Singapore, Malaysia. You don't necessarily have to declare your overseas assets. You declare your overseas income that may be derived from that asset. So that is interesting. Now, from a tax planning point of view, the only real potential planning opportunity is with this law that is very, very specific. I guess the intention is to attract certain skill sets or certain professions. But if it is that you do check the box, then you do have a provision potentially to pay tax on Indonesian source income only for the first 4 years and to legally exclude any income that may arise outside of Indonesia, in this case in the Philippines. So that's the only real planning opportunity available for this family.